Market conditions majority bullish here on S&P futures this morning, up 0.7, has faded this rally a little bit. It was up almost 2% earlier. You can see that topping tail bar running into this supply block here around that 6,000 on S&P 500, going to prove to be some significant resistance, it appears, and watching to see how that holds up. Let's take a look where we closed out yesterday. Majority bullish at 14 and 14. Again, the upper end of this range, this trend. We've had a real sharp move, sharp downtrend, sharp rally back into this upper end of this range now. This supply block is going to represent overhead resistance, and if we can clear through that or even attempt through that, we may get some continuation to the upside on this rally. But it needs a pause here. It needs a little bit of a rest. We've had a decent counter trend move now for the last week or so, which has been relatively constructive, not real whippy, and just some sideways consolidation action for bulls to gather steam. If this uptrend is going to continue. Let's take a look at the breadth here. It's dropped back into that 60s range, tagged that 80 range for a day and pulled back to 65. Now the upper end of that range, that just creates an unsustainable location. Although it can last for several weeks in that upper range, we just haven't peaked into the upper end of the range. So a little bit of divergence here when we're seeing markets reaching significant highs, not quite all-time highs, but still getting some decent looking divergence, not as much participation in this rally based on this number at 65. VIX getting a little bit of weakness right here, majority bearish on VIX. Anything less than 20 still looking relatively bullish. We'll see if we get any kind of action on this if it starts to move back up again. Not so far this morning. SHY, short end of the yield curve, we're seeing the weekly time frame still seeing that compression. We're majority bullish and still working our way to the upside, and equal neutral now, 7 and 7 on the daily time frame for the short end of the yield curve. Long end of the yield curve TLT, well, let's jump over and look at rates, because we should see the opposite of that. Obviously, we're seeing compression here at the upper end of this range. We're seeing majority bearish on rates on the 2-year note, and we're seeing this daily time frame majority bullish right here. So we're actually seeing kind of some compression on the long end of the trend, or I should say the longer trend, and the shorter trend seeing some bullishness here with rates, seeing that on the 10-year as well. Bullish, majority bullish on the daily as well. And if we look at that TLT trend, it's got some support ranges right around this 83 range. Majority bearish on both daily and weekly time frames. Nasty downtrend here, so it's still now working its way back through into this momentum location. Swing high, swing low, counter trend. This is going to be one of the first places of significant test or retest if we're going to repel and continue that lower. If we do, that means that rates are going to find support right here at within this current trend here. From this low to this high, we're right at the 236, and you can see that it's holding and has been holding that. So if we get a continuation of that downtrend in bonds here, we could see a continuation in the uptrend in rates on this 10-year. That 10-year is significant rate yield to be paying attention to. It really is linked to a lot of different instruments, and the bond market is showing that it wants to move higher. This trend is still pretty solidly intact, pretty bullish looking pattern here as well, and if it breaks out, that could see 5 to 5.5% rates. Markets aren't going to like that, so that's one of the trends to really be paying attention to currently. Dow Jones Industrial Average, not quite as strong as S&P, hasn't reached that upper supply location. Is majority bullish at 14. Tight compression on the trend, and we'll see if we get any continuation to the upside or if it ends up weakening right here. That's one of the issues here. We've talked about this price pattern back a couple of years ago. Let me zoom that out just a little bit here and see if the upper end of this compression range. Let me go back, and you can see that we're getting this. This is on the Dow. This type of look after expansion, after a big rally. You got a counter trend here. The question is this the entire counter trend, or are we going to, we've had this big pop, are we going to potentially retest those things and ultimately head back towards compression on this long-term trend. That's yet to be seen, and it's obviously a longer-term process as it's unfolding. Triple Qs, let's take a look here and see how that looks. Again, also pushing up into supply, almost to all-time highs. Majority bullish on the daily. Could use a retrace here as well, as all markets could. It shouldn't be super significant, just a healthy consolidation, retracement of all of this move higher. We'll see if we get that. IWM also not the weakest of all of those. You can see it hasn't even come close to pressing up against its most recent highs. We've got majority, well, we got a neutral trend 7 and 7 now on the weekly, 7 and 7 on the daily as well. So those small cap names, those are your real risk on trades. You're not seeing real demand for that. So that part of that is going to be based on interest rates. Okay, you get investing in an aggressive small cap name is the most aggressive when rates are continuing to climb higher. So market conditions for that asset class really not super strong right now. USO, let's jump over and look at oil and see we've got majority bearish at 11 and 3. It's working its way back towards this uptrend. It's been stuck inside of this range. We talked about this playground zone between here and here. These two ranges pulled back. It's finding some support here. 66 now working its way back up to 69. That's bullish. If we see some continuation and break up above that 69.80, we could see some continuation for oil. It's still got majority bearish. It's got a lot to work to do here on this weekly time frame, but that certainly could be happening at these levels here for USO. Let's jump and look at oil, where we're seeing continued strength. This has been holding up nicely in the momentum zone here above 300. Looks like we're right around 300 still again today. The biggest risk of this pattern is just the expansion of this trend and watching for really a retest or retrace or consolidation. Really anything inside of this, underneath this or above this 280 zone could still have consolidation and still be a really strong bullish trend. It's just really extended right here, and we'll see if we just chop around for a while or if we get some continuation, if we do get any kind of market retracement during this next few days. SLV, also strong bullish trend. Keep an eye on that as it may be looking for a breakout pattern, also similar to the gold pattern. Dollar also finding some strength here. The last couple of sessions, at the bottom end of the train, it's got a really bottom end of the range, so it has a really strong downtrend still as well. A couple stocks to consider this morning. ATGE, nice looking confirmation bar, increased volume back into momentum, and MASS was another nice looking pattern here as well. Big gap, massive volume, so increase in volume, but you can hardly see it on the spot because of the spike of this volume, but there certainly has been an increased volume. Looks like it's going to open a little bit higher than this this close and these most recent highs. That'll do it for today's update. Everyone have a fantastic day today.